everyone. We're going to, because of the timeline, we're going to still keep it to 45 minutes. Or it was supposed to be an hour, but we're going to keep it to 45 minutes. I'm filling in for Marina Neforis because she can not join us today. But I'm going to open with first Shala, who is not only a professor in these emerging technologies, but she also founded the Women in Blockchain for Turkey. And she's also started her own consultancy. So she's going to, do you want to speak from the podium, Shala, or would you prefer from the chair for your presentation? So can you put up Shala's presentation?
Okay, while waiting for the presentation, maybe, Tess, I can talk about my own self. Is that okay? Perfect. Okay, super. So hello, everyone. It's lovely and very nice to be here with you. It's amazing from my perspective because I am a researcher and I have been conducting research on issues like feminism and women empowerment, gender equity, such things. So it's an honor and very, very important for me to have such a conference here in Turkey after more than 10 years, I guess. And also being a part of that is amazing. So as Tess just mentioned, I'm a professor at the university conducting research on technology and society, as well as one of the founders of Istanbul Blockchain Women. And I am sitting at the board of two companies, both technology-based companies. One is a gaming company and the other one is a venture capital company. So briefly, I am very much involved in technology, but from the blockchain and cryptocurrency perspective, please consider me the embodied form of that technology to talk about why blockchain and cryptocurrencies matter. Instead of investing in them, there is a huge possibilities, potential you can do using that technology. But today I'll be talking about mainly fintech, the digitalization of money and financial operations. So and briefly, to start with, I'm going to ask you a question. While I do present my teaching-like presentation on fintech, please think about where does your money live? The question is simply, where does money live? And personalize the question. Where does your own money live? In your bags, wallets, pockets, in your bank, in the form of US dollars, in the form of gold? Where does it live? It matters, believe me, because the history, the human history has told us whenever money changed in form or in the place where it lives, it triggered a force on society. Whenever money changed, the society changed. That is the idea. So when we look back in the history, we know that for thousands of years, money lived in coins, the metal. And then it moved living in paper. And then it moved to banks, the new physical infrastructure, the new home, the new house. But today we know that increasingly money, it already started living in code. So that money is living in softwares, we know that. And this is a huge change. And when we talk about that change, the simply change, we know that today when we say money is living in software, we are talking about money happening to be something which is digital information. So besides being value, money is now a digital information. And that is a migration. That is what we call a migration. But this time, not the migration of people, not the migration of an industry or corporations, the migration of value together with trust. So when we say the money is changing in form and changing in place where it lives, we are talking about simply the movement of financial services from physical infrastructures and physical structures like buildings to digital ones. So simple to say, the money is moving from banks to apps, platforms. And this is where we talk about money not disappearing, but just moving from places to platforms. And from wallets, you know, the physical wallets, some of them moved already to digital gadgets, like your phones or mobile gadgets, whatever. And from cash to code, simple it is. And this matters, because that is not a very simple transformation, but a huge one when we consider the habits changing together with this. When we talk about the value, we have to consider the trust issue, social issues. This is what makes this shift a bit stronger than simply a movement. And what happened when money shifted its place from physical to digital? So, I cannot go back anyways. So when we say the financial services is moving to a new way of infrastructure, which is digital, all together with the abilities, we are talking simply about the technology. I know that this shift I'm talking about sounds quite something related to technology, but now I just wanna talk about the triggering forces behind that huge movement, which are not very much related to technology. Yes, we know that without certain technologies as tools, that wouldn't be possible. What are those technologies? Mobile ones. We know that together with the enabling force of the mobile technologies, we could move the money from physical places to digital places like our pockets or phones. And as well, the cloud technology. For sure, together with the cloud technologies, especially new ventures, including the banks, they could move their huge infrastructures and services from huge, high-secure physical places to simple cloud structures. And the AI. I know we all have been more focused on talking about the artificial intelligence technology and the products coming together with it since a couple of years. But before that, believe me, the finance industry was playing with the AI technologies to work on fraud detection, personalization, and too many other things. And that made that transition possible. And finally, the blockchain technology, whether you like it or hate it. I know there are commonly a few people standing in the middle, whether people loves the blockchain technology, just like I do, or hates it. The blockchain technology brought a new narrative. The new story is not only about the digital currencies, it is about ownership and trust. And this is what enabled that valuable value, the money, to take the form of a code. Is this all? No. There is that final, the fifth one. The very, very important, I mean, this might be the moral of my story. The very important fifth force behind that transition is the mind shift. Without the way of thinking, what we need, what kind of a world we're living in, what kind of habits we now have, considering our business operations as well as the social practices, our daily life issues, we needed that mind shift. We know that technology simply provides just the tool, but for the adoption, which matters the most, we needed that mind shift. That is the moral of the story, so to say. And when we say the mind shift, it is the mindset that brought us to that other value of money. So it is not only about the, let me say, quantitative things about money, but also others related to society. It is, the keyword is access. And once we learned access matters about money, that very much helped us to use technology as a tool to move money into softwares. Because especially when we think about access to opportunity, access to money, access to financial services, breaking the barriers of physical structures, breaking the limitations of geography, we needed that software access. And markets, opportunities, all coming together with expanding globalization by the digital infrastructures. And yes, not only the 5 triggering forces, maybe the idea of access, idea of inclusion, financial inclusion, and all those financial tools enabling that move. Besides those, there is a reality. We have changed as humans. We no more want to wait more than a few seconds, whatever the operation is. We no more want to carry cash. We no more want to trust in centralized corporations, even governments. We have been challenging with our mindset to the digital world. And this might also be one of the triggering forces. And this is how we built the new digital infrastructure. And then, not the last one, but came the next chapter, when literally money took a new form, which is that decentralized Web3 form of cryptocurrencies. And this is like another revolution when we consider the digital movement of money. Because this new form, by the security provided with the cryptology technology, now that we didn't need any corporations, I don't want to literally say banks, but even governments, considering the central banks, but trust came together with the code where money was uploaded. And to conclude, I'm going to pass the word to Tess and Özgür, and they will be talking more on the cryptocurrencies, stable coins, and so on. But to conclude, whenever you hear the word fintech, probably you'll keep on thinking about where technology meets finance. But I'm telling you, fintech is pretty much more than technology plus finance. Fintech is no more an other or an alternative industry sector, because finance itself is becoming fintech. Thank you very much for listening to my teaching and presentation.
So she gave us a wonderful overview of this transition to our desire for a cashless economy. Whoops, sorry. So we just learned of the transition of where we are going towards a cashless economy. All I'm going to do now is I'm filling in for Marina, and I'm going to define more the currencies, but because this isn't my day job, I actually have to read my notes, unlike our experts here. So, there are 3 basic categories of digital currencies. First, as mentioned, is the central bank digital currencies, which is the acronym CBDCs. Then you have the stable coins, and then you have the cryptocurrencies, which is what makes most of the headlines. These 3 different categories differ in one, the price volatility, who actually issued the currency, and what regulations they follow. So if you look at the central bank digital currencies, that is what's most closely represents the money in your pocket today. So that is basically, it's issued, these CBDCs are issued by the central bank of countries, and it's the digital form. So today there is a pilots going on. You have the digital yuan from China, the digital euro from the EU zone. You have also, let me see what other countries are doing it, India's digital rupee. So we have a total of over 140 countries, representing 98% of global GDP, currently in process of implementing digital currencies. This is why Irene wanted everybody in this room to know about it, because it isn't on our radar screens. And what happens when we transition from one platform to another is either you understand what's happening so you can join in, or you end up getting left behind. And it is so important that Irene wants everybody to say, okay, you may not implement it, you may not integrate it initially here, but at least the information has been out there. And so, you know, the excellent FinTech evolution that was just presented gives you the framework of how you can watch this. So the stable coins, okay, so you have the bank, so that's the one where you have the least amount of privacy, because the government understands and sees how your money is spent, because everything is now digitized. Now you have what they call stable coins, and these are issued by private companies. And the private companies want to peg their stable coin to a traditional currency. So that also, the price volatility is low because it's tied to a currency. But what makes it a little bit risky is that you don't know, because of this private company, you don't know whether or not there's going to be any changes to what that company decides to do with its coin. So that's where the risk is. But in this case, because it's a private company, you know, infrastructure, digital infrastructure, it's going to provide more privacy than where the government is watching every single time you do a transaction. The most volatile and risky of all three of these digital currencies is the cryptocurrencies. And this is where you've heard the headlines, you know, the bust, the crazy valuations, and that's when you're talking about Bitcoin, Ethereum, and a bunch of other ones. So here are the top digital currencies today, but they only represent 3% of total available money, which means we are in the very earliest day of this financial infrastructure transition. So if you remember in 1995, who was on Netscape when it launched? No one, right? Very few. So we had a handful of people who were on Netscape. We are at that realm right now in the digital infrastructure of our financial systems globally. We've got 130 countries who are piloting their digital infrastructure, while you already have 10 who've already implemented where it's sold at retail. So what's really important is understanding that in this scenario, if you look at the entire digital currency space, it's around $2.5 trillion, of which $1.5 trillion is just Bitcoin. And it's been there the longest. So Bitcoin, so everything in green is a cryptocurrency, which means it's on a decentralized, publicly shared, and I think Oscar is going to go more into this, but that's where it's traded, and the governance is on a public chain. Whereas when you're looking at Tether and the USD coin, which are the stable coins, those chains aren't as public as the cryptocurrencies. So if you want to know what has changed, and this is just really repeating many of what Shala had talked about, is we had the traditional banking, where every time it crossed a border, you had to change and pay foreign exchange fees, wiring fees, and it had a lot of paperwork, and it took days to actually get your money. With the digital upgrade, you can actually, everything goes quickly, fast. The system is open. The digital chains are all open 24/7. And so you can settle within the day, within the hour, within 5 minutes. But the costs are nominal, very cheap, and you can do it on your phone. And so what happens? So let's imagine an entrepreneur named Maya, who's here in Turkey, in Istanbul, and she has a cotton textile business, organic textile business. Imagine that there is a Kenyan designer, a designer who wants to use her cotton. In the old days, the designer in Kenya would have to take US dollars, or her currency, exchange it for US dollars, pay fees, pay a wire, and then have to go ahead and send the money so that Maya in Istanbul can receive it. It'll be 3 to 5 days before she receives the cash, and then Maya would send her the cotton. So you have at least a week long of production, stalled production. But now when they go into a stable coin, what they do is all of a sudden you can do it on your phone. You don't have to actually, you can order very small amounts because now you don't need to have a certain dollar value to justify the cost of the wire because the fees are so low. And you can do it instantaneous because you are operating on a system that's 24/7, 365 days. What's nice also is in a stablecoin, you can also, if it's tied to the US dollar, you're hedging with a stable, well, depending which currency you choose to do the stablecoin, it takes away some of the volatility in the emerging markets. So this is originally, I was going to talk about investment, but I think Oscar's going to be able to do that a little bit better and more with his experience. But what you want is the alternative digital assets, of which what we're discussing today, should really be less than 10% of your balance sheet or your investment portfolio at this point in time, because we're not there yet. It's still a high risk. But so if you're preparing your business, because I saw maybe a third of you probably have a business, or if you just even want to understand what you want to do in the future, educate yourself and download one of these digital, reputable, regulated digital wallets. And you can experiment, just like we had cashless peer-to-peer, whether it's Venmo or PayPal or any of these other types of apps. You can actually set up some of these other, and I think Oscar will go ahead and share that. But then you'll evaluate based on your trading partners, your suppliers, or your customers, who's probably incurring these high foreign exchange fees or these wire fees. And then you can explore which payment platforms, and a lot of the big ones are already integrating digital currencies. So I think I hopefully gave you an overview of the 3 big buckets of digital currencies, and I identified some of these coins. But Oscar's actually going to go in more detail because he's built one of the largest, actually the largest, the largest digital currency trading platforms here in Tukea. Thank you.
Thank you very much. I would like to thank Irene and the team and Tess and Çağla for giving me the opportunity to share my ideas today with you on a beautiful Istanbul weekend. Also, a lot of guests from all over the world coming to Istanbul. Welcome, and I hope you are enjoying your time here. Today, I would like to share, I've been in the industry for almost 10 years now. I would like to share 3 stories of my 3 friends that we can hopefully all learn from, because I learned a lot of, I met a lot of people, and I learned a lot of things from a lot of people in this evolving industry. There are a lot of smart people, also not very smart people, but also a lot of smart people making dumb decisions. So I would like to share what I have seen during the past decade. I hope it's going to be useful for you as well. Usually when I speak, I am either very popular or not, depending on the price. If Bitcoin is going up every day, I become more popular. If it's going down every day, I'm less popular. But today we're not going to speak about the prices much, but mostly how we should approach to crazy volatility. I think volatility is gonna be in our lives even more in every area. Political volatility, weather volatility, and financial volatility, obviously. In the past, Bitcoin and cryptocurrencies have been seen as a crazy volatile assets. But now going forward, it's going to increase even more. But all global exchanges, gold, when I started my career, for example, in 90s, if Dow Jones go up more than 1%, everybody is like, what's going on? What's the reason behind it? It was on headlines. If gold moves $10, it would be a big issue. everybody would start speaking about it, but now everything is going up and down like 3, 5, 10%, because with internet, information started flowing, and after internet, also money started flowing in different asset classes very fast. That's why when I prepared the presentation almost 10 days ago, it was 2.5 trillion industry. Now, as of this morning, it lost half a billion, roughly. So it's 2 trillion. Maybe in 2 weeks' time, it's going to be 1.5 or 2.5, I don't know. So currently, it's around a $2 trillion industry. And when you consider the fact that Bitcoin just became live in 2009, it came a long way. It was the first asset, and it created the asset class. And currently, there are thousands of, hundreds of thousands of people working on it. Billions of transactions are going through blockchains and cryptocurrencies, digital assets every day. And Bitcoin is still the market dominant asset class. And also with the new trend, stable coins are getting a lot of traction. Trillions of dollars of transactions are settled annually. And when we look at the past, in 2009 when Bitcoin started, after that we have seen some phases for the adoption of digital assets. First, technologians own Bitcoin. They were curious, they were engineers, they were early tech adapters. They were asking questions about this new technology, and they started buying and selling it. Maybe some of you remember a guy in 2010 paid 10,000 Bitcoins for 2 pizzas, and it now worth a lot of money. The most expensive pizza in the world. And in 2017, again, you may remember when Bitcoin hits $20,000 for the first time, everybody started talking about Bitcoin. And that trend also added a lot of mass people, a lot of especially younger generation people into Bitcoin and cryptocurrencies. So this was the second phase. And the third phase, especially with the COVID in 2020 and 2021, a lot of, in banking terms, affluent and private clients started to come in. They started buying Bitcoin and other cryptocurrencies in different amounts, maybe a little bit addition to their portfolio. And in 2024 onwards, we are seeing institutions coming into the picture for Bitcoin and other digital assets. So when we go back and look who owns it and match it with the asset class, in 2011 there was only Bitcoin, so everybody was buying Bitcoin, obviously. And with the huge increase in price and adoption in a way, we have seen new ICOs coming into the market. And 2017 was the market of initial coin offerings. There were a lot of projects becoming or claiming to become the next Bitcoin. Most of them were scam, unfortunately, as there are a lot of scammers in new industries, as always, and that was the case in digital assets. So ICO was the idea of 2017 bull run. In 2021, a lot of people bought NFTs. People bought land or places to live in metaverse. I don't know where they are right now. So it disappeared, but it was on the news all over the place. A lot of Turkish people were buying Istanbul on the virtual world. This also hype passed away. But this time, when the institutions step in, there are 2 more ideas are now getting more and more popular, and I think it's going to stay. One is stable coins, as Tess explained, and the other one is tokenization. So this trend of 2024 and onwards, I think is going to be much more stable. Throughout 10 years, I had 3 friends, and I learned 3 main points from them. My first friend is a founder. He is working on digital assets. He's setting up a stablecoin startup. He recently raised over $100 million. And he is allowing people to settle cross-border trades in a much, much efficient, faster, and cheaper way. So what I learned from him is purpose. So when you're coming into a new industry, it means a lot of opportunities and risks. But if you don't have a purpose, just like in life, you get lost. So I am today, my takeaway or my main goal is to make you curious, to be honest, because this industry is changing so fast and developing so fast, and I'm just a human being. I cannot tell you what's going to happen within 10 years. But if you want to understand new technologies, including AI, blockchain, cryptocurrencies, or any other technology, I think first you should have a purpose. What is this good for, and what's this helping for? How does it make other people's lives easier and better? I think that purpose will give a lot of us, and there are a lot of executives or decision makers in the room, and I hope that through this exploration, they will find the right purpose for their own personal financial solution, or their company's perspective, or their government's perspective, or for their people, or friends, or family. So you have to have a purpose. When you have the purpose, it's going to be very easy for you to focus without all this noise, and you can start building things or become the part of the change, and you can even control it. The second item is discipline. Just I was explaining, I have another friend who first tried to find the new Bitcoin through ICOs in 2017. He failed, obviously. And then he tried to find the best NFT or the monkey that would worth $2 million, the monkey image. So he was going after that hype. But when you don't have discipline, even if you're smart, you cannot make the right decisions for your portfolio, or for company, or your for financial future. So if you don't have a method and a strategy, and if you don't kind of understand you first, then you cannot make the right financial decision, in my opinion. And especially if you, with the new technologies, if you try to go after whatever is hyped right now, the life is gonna be very hard, because before new technology or new ideas coming up every 10 years, then maybe 5 years, then every year there's a new trend. And if you don't know where you're headed, you're gonna be lost, and you're gonna be losing a lot of money in between. So discipline is an extremely important part of the investment in cryptocurrencies as well. And the third one, she's the smart one, obviously. She's the patient one. That friend, when I moved to BTC Turk, I moved from traditional finance, by the way. A lot of people thought I ruined my career, going from investment banking executive role to cryptocurrency space. But actually I was doing the same thing, which is safe, reliable, and easy access to financial products. But in this space, I was doing the same thing for new generation financial products or digital assets. So I was doing the same thing. And when I moved from traditional finance to new generation finance, she kept asking questions. What's Bitcoin? How does it work? Why is this valuable? What do you think about it? And then by asking a lot of questions, she kind of was able to understand what the real value proposition is. Bitcoin is a hard asset. It's the new digital gold. Yes, it's volatile, but if you have a time horizon, because volatility becomes even more if your time horizon is just 1 week or 1 day. But if you have a 5-year, 10-year vision, then volatility it's not an issue anymore. So she understood what the value proposition is, and she thought that it has a value in her portfolio, and she started accumulating it. She didn't care about the price. She didn't care about China banning Bitcoin. She didn't care about the new US president is very pro-crypto, or any other government or company is promoting a certain asset class. She just believed in Bitcoin, and she started accumulating regardless of looking at the price in a reasonable ratio in her portfolio. And she is the patient one, and she is the winner, obviously. So today I also would like to urge you to understand your financial goals first, and then make the right decisions in new technologies and new asset classes. So what I would do on Monday when you go back to your office or where you feel is the best place for you to focus. I would explore more on the shifts through digital assets. The first one is stable coins. Now with the technology of stable coins, now payments is gonna be even freer, faster. So as a company or as an individual, if you understand how stable coins work, you don't have to understand the technology, by the way. I don't even understand today how blockchain works. I'm not a developer, I'm not a coder. I haven't seen a single line of code in blockchain, but I can still survive. So you don't have to understand all the background about it, but you have to understand how stable coins work and how this may create value for your small business, for your large corporation, because these trends are not just for people who wants to build something new or make a difference. If you're not early adopter or if you're not fast enough to understand and absorb, you're out of the game. That's why learning stable coins is number one priority for me, would be the first priority. And the other one is tokenization. Tokenization is kind of turning assets into digital tokens. I mean, they are all already digital. When you buy a stock on NASDAQ, you don't literally go and take it. It's just, it sits somewhere on a server. But with digital assets and tokenization, this asset becomes transferable, programmable, verifiable new asset class. So tokenization may bring a lot of value into your business or strategy. So tokenization would be my second priority. And the third one is obviously Bitcoin. If you are considering any portfolio, personal or kind of institutional, doesn't matter, Bitcoin should be part of it. And in crypto, there will be a lot of people around you who may urge you to invest in the new token. I would suggest that if you don't understand how it works, I'm not talking about the technical level, how it works in real life and how it really offers a value, then don't buy it, don't touch it. Don't buy anything you don't understand. And the third one, if you decide to invest, I would go for Bitcoin with a long-term view and with a discipline regardless of the price. Don't look at the price. Price is just, it will bring you regret. I should have bought more. I should have sold last week. I should have bought less. So don't look at the price. Have a long-term view and accumulate. I think these are the three lessons that I learned and I wanted to share today. Thank you.
And they say women talk too much, huh? That's good. Great presentation, thank you very much. I just want to add on a few words just to expand your vision on the blockchain technology, because I am the developer he was mentioning, and I have been building on top of those decentralized infrastructure. So Tess had a lovely presentation and he had a lovely presentation, mostly focusing on digital currencies. But I told you, I am the one to advocate blockchain technology is much more than this. And when we talk about tokenization, we no more are talking about the money itself, literally. Just let me give you an example. Right now, at the moment, since 2 years, I have been working on a project, a funded project, funded by Turkish government and Qatar government. And they asked us, myself and a professor from Qatar University, to develop a platform which is gonna tokenize the equities, shares of startup companies, and the platform will be a crowdfunding platform basing on blockchain technology so that startups are gonna have the access to global money. So they can easily be funded by investors without the limitations of certain countries and banks. So this is what tokenization is, and this is what my presentation was all about, the access to equal opportunities, considering within the context of money, as well as the inclusion of women and the young generation. And thank you. Thank you.
I want to add to the tokenization. So a tokenization project that actually I was involved with maybe 10 years ago with proof of concept was if I took a building, I can actually raise the money to renovate this building by selling these tokens for the building. And I could put it out virtually and people could invest in it if you were involved and you had access to this project. I was just attending in this same ballroom 2 days before we started was the largest blockchain conference in this region. And I attended the last day because I was very curious. And of course, it was 95% male. And so one of the things that I urge everyone to do is, yes, you can be a little bit cautious, but go out there and learn about what this transformation is going to do in your personal life and also to your businesses or the companies that you're going to work in. Because it's not about, you know, it's just kind of like the people who didn't join the internet till after it busted. You know how long it took for them to ramp up to even compete with Amazon? But at least you try and you fail, and women are too risk averse. It's really important, and I'm really glad that Irene had put this topic on the agenda because we need to know more about these digital currencies. There's a microphone over there in the center of the room, so if people have any questions, if they can line up to ask any of our experts. Otherwise, we'll start a conversation if...
Can I have? Yeah.
There's a microphone over there.
Can you use this one?
There's a microphone. Oh, you are. Go ahead.
Hi. Narisa from Thailand. I have my payment company, which is Fiat Money in UK, and also set up blockchain company in Dubai, doing tokenization and crypto wallet. Because I work for the two worlds, fiat money, which is normal money, and also crypto money. So for crypto money, I used Ethereum BNB to do cross-chain to issue tokens, and also tokenization. My question is, we are seeing increasing regulation and very tight controls, and even freezing the crypto assets. I know that compliance is very important. I'm come from compliant background. Are we at risk of making crypto too similar to traditional banking system? How do we balance regulation and security with the original goals of crypto decentralization, self-custody, and financial freedom as envisioned by Satoshi and our crypto community? So how we balance it between regulation and the freedom that we should have. Thank you.
Thank you very much. It's a great question. There is a lot of debate, like with regulation, is Bitcoin gonna die? The freedom is going away and everything. In my opinion, actually, regulation is for regulating people who wants to access it. So I believe cryptocurrencies will merge with traditional finance, and it will make everything better, in my opinion, just like internet did. When internet came, there are still a lot of bank branches all over the place. They didn't disappear. And Bitcoin blockchain doesn't care whether a wallet is a government wallet, a $10 student wallet, or anything like that. So Bitcoin will always stay as a free environment. But if you want to create a business on top of it, or want to make money, or start a structure, then regulation is going to regulate that. And of course, regulators are just normal people, they cannot see what's going to happen in the next 10 years and create the regulation as of today. So the industry and the regulators and the users will learn together, and I think we will find the best solution for becoming easier and easier in terms of financial freedom. If it doesn't work, maybe not Satoshi Nakamoto, but some other people will come and use technology, maybe this time AI, and the agentic AI economy that is already starting. So there are going to be a lot of developments on the other side. So we'll see how it goes.
But also using something that's industry regulated and accepted, like Ethereum. So the reason why I really was interested in the Ethereum is it became the basis for all the Wall Street banks. So I wasn't just, yes, I was investing in this young woman who is building in the Ethereum network, but also because I knew that the plan was to become they were targeting the Wall Street banks. So it's hard to do it when it's just a niche, because then one regulation can wipe out a niche quickly. But if you know that it's going to be a consortium, it's much more likely for adoption.
Just add one more thing. I use USDT for cross-border as well, stablecoin, to move the fund. But now USDT with the MiCA regulation in Europe, I don't think exchange can have the USDT, because people just are not sure about, peg one-to-one for the Tether as well. So you have any comment on this?
This challenge is going to continue. If the regulators try to squeeze everything so much, then they're going to lose the edge. Because the technology is here, it's evolving, and whoever adopt the infrastructure and the technology will move faster. It's just like internet early days. You cannot just kind of ask every website developer to come to you and ask your permission to come up with the content. So along the way, new rules came up. I think every regulator will kind of have to find the balance. If they are too harsh on innovation, then it's not going to be very good for the regulatory environment they're trying to flourish. If they are too loose, there will be a lot of people get burned. It's inevitable. So that's why I personally believe on users and innovators. They will always find a way to offer something better for the people in general. That's how Satoshi Nakamoto came up with Bitcoin. I think Tether pulling out of European market is fine, but Europe cannot disregard stable coins. People will need it, people will use it, whether you like it or not. So they also have to find a way to make the innovation flourish, to be honest. Otherwise, people will move other directions.
How many more people have questions? Because then we'll take on them all at once.
Yes. Can
Okay,
I
we'll take-
ask a question? Thank
But we're
you.
going to ask you to take, so two people will ask their questions, so then that way we can answer two questions with one.
Okay. Hi, everybody. Good morning. My name is Ayşen Tumbay from Turkey. I thank you for your presentation. It was very good for me. And I would like to ask you a question. And you told us the 3 shifts of being purpose, discipline, and patient. And for me, I am 52 years old as an entrepreneur in Turkey. The 4th one is to be brave to do that, because our currency and money is very important in that age. So although I have a technology company, I'm scaring off using internet and cyber security. And I would like to ask you, how can we secure our currency? How can we use Bitcoin? Because we are new startups about these positions. Thank you.
Hi. Last question or last one asking. I'm Maria Alonso. I'm coming from Spain, and I have a company who does AI for 9 years already. Anyhow, I'm not much into either crypto or still stable coins, but I'm very interested in them. And I have a concern, maybe because of my lawyer mindset, but it's a question of security. And I mean by that, currently for cryptocurrencies, if you lose your key, now it's very usual that you know that you need to keep your key very safe and so on. But people who were early into crypto have lost their keys, and now they could be billionaires, right? So is it still going to be like that? You just have one key and you have no way of recovering your key absolutely at all? Because if all stable coins and digital currencies are going to be used and born just on our smartphones, that's as well a risk. So I wanted to ask about that. Thank you.
Thank you very much. I think both questions touch almost the same part. Bitcoin and cryptocurrencies may be scary. I agree. And the main reason is that Bitcoin offers a lot of freedom, but freedom comes with a big responsibility. So you have to understand what type of freedom you want or what type of responsibility you would like to carry. Then there is a whole spectrum you can operate in. For example, if you want to invest in Bitcoin, but you don't want to really understand what a wallet is, how it works and everything, you can just go to US market. There is an ETF called IBIT. It's just like a regular exchange traded fund, which is fully invested in Bitcoin. So you can easily do that. You don't have to, you can just have a brokerage account and that's it. On the opposite, you can just mine Bitcoin, let's say, and keep it in your wallet. Then you have to remember, and not remember, but safely guard your keywords, because if it's not your key, if somebody has your key, it's not your Bitcoin anymore. So this is the other spectrum. That's why knowing yourself in terms of comfort is a critical point. You don't have to use the exact wallet with all the keywords and everything. If you don't want to do it, you don't have to. You can use other ways, but if you don't want to go through a broker and invest, then this is also something you don't have to do. You can just buy Bitcoin or you can stay in between. In terms of adapting cryptocurrencies in your business or industry, I think our industry is doing a good job in terms, especially in the past few years, mostly because they are now developing new technologies for integration. It's just as easy as accepting a credit card payment or securing your assets just like a bank account. It's very easy these days. But especially, which is, I'm not like anti-bank or that, I don't have that mentality, because traditional finance is so big, and with the help of them coming into blockchain and cryptocurrencies, it's going to be very easy for everyday business, everyday people to use cryptocurrencies in their daily life. So the industry is moving so fast. Don't be scared. That's why explore. Try to understand what is your financial goal and where in the responsibility spectrum you want to be, then you will find the solution.
And a little advice from my side. I have been working with many women who are mostly underrepresented, and I have been working on the digital literacy with them. So one advice, if you want to invest in cryptocurrencies, make sure that you have the necessary literacy. And always remember, last year there was a huge fire in the US, in California, and that demolished the houses of very rich people. And we knew that many of them had their hard wallets, the wallets they were keeping their cryptocurrencies in their houses, all burned out. And in Turkey, we not each and every year, but we have tough earthquakes. So I don't know where you are coming from, but consider how dangerous trying to keep digital assets in physical wallets may be. So, but that is one option. The other option is keeping them in digital forms. But for that, you need to have that literacy. Just beware when you invest.
Well, I want you guys to remember what they said. You have to know it, learn about it, and invest. I love Tessa's idea about tokenization. That was a very interesting application. Tess is very adventurous. Not all of us are. She's not risk averse. Her name is Risk. But she does invest in a lot of very interesting ideas. So I hope you feel you have learned more. You should try and feel comfortable, and if not, don't do it. I mean, right? It's just like any investment. It's like deciding whether you buy a stock or not. But we need to know about this. So,
But it's not just on the investment. This is an operating cost reduction. So if you work in corporate America, not just corporate America, but any corporation, this will be a cost reduction implementation integration within the next 10 years. So if we want the women to lead, add this business to augment existing businesses. If you're a service provider to any of these corporates, there will be a transition. It's not an if, it's a when.
talk to Tess. She'll tell you how to make it a business. Anyway, thank you so much, Tess, everybody in this session. We needed this.